Good evening, everybody, and welcome back to another episode of Enter Crypto, where every single day I keep you informed and fully up to date on all things crypto. If that sounds like something you would be interested in, then like, subscribe, and click on the notifications bell so that you don't miss out on any future updates. So today we're going to be talking about a Spanish bank, in particular A&G, and they have, according to the title of this article from Crypto News, launched a crypto investment fund offering. So as always, we'll read through the article quickly and then we'll comment after. So the leading Spanish private bank A&G has launched a crypto investment fund offering, and a sign adoption is continuing to rise in the European nation. Europa Press reported that A&G will launch an investment fund product after registering the fund's brochure with the regulatory National Securities Market Commission, otherwise known as the CNMV. The fund will be the first of its kind in Spain, and the bank said investors had expressed great interest in crypto investment. A&G said crypto investment can be channeled with more efficient risk management and control via investment products that are safer and better regulated. The bank also said that funds where professionals subject to supervision are involved represented a safe choice for crypto-keen investors. Another bank, CAC EIS, will function as the fund's depository, while PwC PricewaterhouseCoopers will serve as its auditor. CAC EIS Bank is the joint asset servicing arm of the European banking powerhouses Crédit Agricole and Santander. Last month, CAC EIS was awarded a crypto custody license by the French markets regulator. A&G said that the exact composition of the fund had not yet been determined, but the bank said the fund will have between 50% and 100% exposure to crypto, exclusively through financial instruments whose profitability is linked to tokens. The fund will have exposure to both Bitcoin and ETH, and it will also have a minority exposure to other existing or future crypto that has satisfactory levels of volume and liquidity. The brochure notes that A&G's new fund may not be suitable for investors who plan to withdraw their money in a period of less than 4 years. However, the brochure also includes mandatory warnings from the CNMV. The regulator notes that the fund involves investments in financial instruments whose profitability is linked to crypto, and this entails, per the regulator, very high levels of risk due to crypto's extreme volatility, complexity, lack of transparency, custody and concentration risk, which may lead to the total loss of your investment. In March, a prominent Spanish MP said he was stepping down from his role in Parliament to pursue a crypto-related career. And earlier this month, a tax firm claimed that 70% of Spanish crypto holders making tax declarations had experienced losses on their token investments in 2022. Now, before I say anything or give my thoughts, I would be really interested to see if you leave your opinion in the comments box below as to whether you think this is a good idea or not. Because on the surface, it seems like a good idea that we're getting more services offering crypto, more exposure to crypto. The people of Spain will be able to go and, on the surface, invest in crypto and get exposure in that way. But on the other hand, it doesn't actually, I'm not sure what the rules are yet, but you're not actually buying crypto when if you put if you put $1,000 into this investment fund, then you're going to get crypto exposure. So when crypto, let's say it's a Bitcoin ETF or something like that, when Bitcoin goes up, you're going to make money. But no one's actually bought any Bitcoin. It's almost exposure, and this is one of the problems with the precious metals market, actually, in that there's a lot of paper gold going around, and if that had to be settled at any point in time, we wouldn't have enough gold, physical gold. There's too much paper gold going around, and not enough physical gold to meet demand if something went wrong with this paper gold system. And that is kind of the way that they're going with this, in that this is sort of paper Bitcoin in a way. It's just Bitcoin on paper. It's not, you're not buying the underlying asset. And so to me, that introduces a kind of third-party risk now. So instead of you just buying the Bitcoin and being exposed to the Bitcoin price going up or down, because you obviously hold the Bitcoin, you only have that one risk. Now with this, you have that risk, but you also now have an investment fund. You have to rely on them paying you. You have to rely that they don't go out of business. You have to rely that if they do go out of business, that the Spanish government will bail them out so that you can get your money back. So there's extra risks for really not a lot of reason. And there'll also be fees attached to this as well. You're also going to pay a fee to this investment fund every year or every 3 months, whatever it is that they decide it's going to be. And so it's not only just an extra risk, but it's now an extra cost as well. So really think about before investing in these types of things, because they're actually designed for, you may say, well, why would anyone invest in these types of things then? And the reason is because companies not just companies, but companies can, but pension funds, sovereign wealth funds can easily get in and out of ETFs. They can lock money up in stuff like this because the regulations, for example, say that a pension fund is allowed to enter into, to expose itself to an ETF, for example, but it's not, because there's no regulation around crypto yet. They're not allowed to buy crypto because it's too volatile, it's too risky, you can lose the Bitcoin easily, things like that. And so the government say, well, you can't play with people's pension funds like that, because if you lose the money, the people with the pensions are not going to have a pension when they get older. And so that's not a risk the government is willing to take. So instead, this way, the government kind of are in control and the company's in control, and so they allow, so this way you can still get the Bitcoin exposure. So when price goes up, you win. When price goes down, you lose, obviously. But it just means that it's very convenient for companies to jump in and jump out of an ETF due to the regulations, basically, in that country. And so I'll leave it at that. As always, guys, thank you for watching and listening. Don't forget to like and subscribe if you feel like you've got some value from this video. And as always, I'll see you all tomorrow evening.